Welcome back, guys, to another episode of Dimitri's Desk. Today is August 5th. This is episode 8. And man, we have a lot of action going on in crypto market. Agenda for today's episode. We're going to run through the charts as always. Going to take a look at the most important charts for BTC, Ethereum. We're going to look at EOS. We're going to look at IOST, of course, and see where things are and where they might be heading. Last week was packed with fundamental news. We're going to cover a little bit of a macro. We had the Fed cutting rates. We have China's dealing with Hong Kong protests. We have tons of things to cover. I'm going to also cover an indicator, a report that comes out every week that shows you where the futures are positioned for BTC. We can see where the institutional traders are positioning themselves week after week for BTC. All this and more on today's episode of Dimitri's Desk. All right, as always, we're going to jump into IOST USD first. We're looking at the daily chart, and as we can see, not much going on here. We're still battling that resistance of a penny that we've discussed last time. We are up about over 60% from the bottom that we made here, which is a little bit above 0.6. We can see that ADX is actually dipping below 20, which indicating that we are in that temporary range environment, which makes sense because we see a lot of sideways action going on a daily chart here, where essentially we have the buyers and sellers are trying to decide the next direction for IOST USD. And we're sitting at that penny where we have to break that. We attempted to break that multiple times, but we haven't had a significant close above a penny to indicate that we are, in fact, going to be moving higher. Now, this could be a good sign because when we have these type of formations, we can have a break, obviously, to the upside or the downside. So this is a healthy market environment, and I've spoke about this on the last episode, where once we approach that penny mark from that bottom, we will see somewhat of a resistance, and that's what we're seeing. So for now, we're holding to see how this is going to play out. Are we in fact going to break that penny and then test it and make sure that it is support before we move higher, or are we going to trace a little bit lower before we actually break through that penny resistance? But overall, IOST USD has been holding up well. We're just moving in a sideways direction right now. Next up, we have ETH USD. And as you can see, since the last time we spoke about it, we're still relatively within that price range, below 240. And it looks like OBV, the volume commitment, has not shown significant moves yet. And right now we're sitting above 20-day moving average, below the 50-day. It seems like we're trying to penetrate that 240 mark and maybe continue the run higher. But for now, it looks like the price is not making any significant moves at the moment. We're still relatively within the zone that we have outlined here. And we will continue to watch the development of ETH USD in the coming days to see how the price is reflecting the current market conditions for ETH. Moving right along to EOS USD, and similar type of picture from ETH. It looks like we're trying to recover from that bottom that was made, and we're essentially moving sideways where the traders are trying to decide the next direction for EOS USD. And looking at the volume, OBV is not showing anything significant. We're kind of stuck in this sideways movement where we're below $5 for EOS. Until then, it seems like there's no point to chase and take initial positions for a long side before the $5 break. So for the moment, I feel like a lot of people are staying on the sidelines to see the commitment of price to move higher above 5 and then start picking their entries as we test $5 as being the support. So right now, we're still, again, in that sideways indecision movement on a daily basis for EOS USD, similar to ETH. and some other coins in the market. But for now, it looks like we're still somewhat up on 20-day moving average, and we're still below the 50-day moving average on a daily. So for now, EOS looks like a sit tight type of environment, nothing actionable. And lastly, before we jump into the meat of the episode, we're going to look at BTC USD. As you can see, we had a great day today, 7% up. And overall, last week we closed 15% up. So things are looking up for BTC in general. I talked about the resistance that we had, 11.5, which we blasted through with no problem, now hitting that 12K mark as being the resistance. And the price is above the 50-day moving average, the 20-day moving average. Looks like things are picking up in general for BTC USD. So right now we're looking at a little bit of a pullback to respect that 12K resistance. And then from there on, we will be looking for the price to go higher to the mark that I mentioned on the last episode, which is 13K. If you are holding positions, a lot of traders are taking profits because they're up a pretty significant amount if they did catch the bottom below 10K or even 10K. So a little bit of a pullback will be healthy for BTC USD. And as always, we'll look at the BTC dominance in respect to the overall market. We can see that on a weekly basis, BTC is continuing to climb in dominance, but we're seeing that the market cap is climbing as well. Therefore, we're seeing a little bit of a relief for alts. As BTC continues to move up. We had a different situation where BTC dominance was going higher and then market cap was dropping, where, I was talking about the rotation out of alts into BTC. Now we're actually seeing that the alts are starting to catch up a little bit. Now everybody's asking, when is the alt season? But we'll have to wait for more confirmation in regards to alts really making the big wave in comparison to BTC. Right now, BTC, as you can see, is leading the way. All right, let's jump into the meat of the episode. As you know, last week Fed announced their rate cut, which hasn't happened in more than a decade. That was on Wednesday. We saw price appreciation from BTC. We went up over 5% in just one single day when the Fed announced the rate cut. And from there on, it looks like we'll continue to push higher. So the rate cut was huge from the macroeconomic standpoint. It looks like the Fed sees a need for a bit more stimulus for the U.S. economy. We have fundamental news in play with China, where the trade talks are being discussed and things are not moving in a pleasant direction for both parties. So we have essentially that trade battle that's going on, as well as tensions in Hong Kong with protests and so on. Interesting thing that I noticed between Chinese yuan USD on a daily and BTC USD. As we can see, for these couple days, we had somewhat of a reverse action where BTC is rallying and the Chinese yuan is losing value in terms of USD. This was actually taken right before a lot of fundamental news coming out of US. We had ISM numbers, we had PMI that were scheduled to come out. They came out today. They came out poor. Things are not looking good. So it's an interesting trend to see if it continues for Chinese yuan. There's a lot of obviously involved in Chinese currency and how they control it. I'm not going to go into it right now, but it is definitely an interesting development where we see these two things have an opposite reaction. All right, now let's jump into COT, or Commitment of Traders Report. This comes out every week on Friday in afternoon Eastern. And basically what it does, it shows the positioning of institutional traders in the futures market for BTC. As you can see, the recent report shows And you can see this in blue, it shows long positions, and red, short positions. We can see that the prior week before that, we had a net short positioning over institutional traders. Now we flipped to net long last week. Keep in mind, this report comes out every week at the end of the week to show the positioning for that week. So meaning that what we're discussing now happened last week. Since last week, they've repositioned to net long, pretty heavy ratio. And you can see here long positioning and short positioning. So these guys are obviously trading huge amounts in futures markets as far as BTC goes. So it can give you an idea of how these institutional traders are seeing the development of BTC in the near future as far as the price goes. You can take a look at also leverage positions as well, which is an interesting point here because you can see that the short positions have been slowly dropping, even though the leverage positions are still net short. And this can actually cause, leverage positions obviously can cause squeezes if it's one-sided on the short side or on the long side. And this is what we might be seeing actually going on right now in the market, where a lot of these short positions leverage that are being squeezed out and pushing the price higher. But the main report, if you want to continue to monitor the futures, is the asset managers and what their ratio is and how it changes week after week. It can give you kind of an insight behind what's going on in the minds of these institutional traders. And lastly, guys, I wanted to talk to you about this article that came out on Bloomberg. For the first time ever, mortgage bonds are being sold at a negative rate. So this is something very significant as we continue to talk about the overall market of negative yielding bonds in the world, where we recently just breached that 13 trillion, which is huge. And now we have this negative yielding mortgage bonds that are going to be deployed in Denmark. And the significance of this continues to show you the tension between U.S. and China trade war, where the rest of the world doesn't really know how that's going to play out. Things are not really looking good right now. So when you see something like this happen in traditional finance, it's very not traditional to have negative rates just in general. But now mortgage bonds having negative rates, this is one of the reasons why you see a flight to risk-off environment, where you have gold going up, you have BTC going up, you have all these less risky assets that still provide yield are going up in value, where essentially these bonds and a lot of the bonds in the market right now are not providing these type of yields, and you, as a matter of fact, actually losing money by holding them. So, and nobody wants to be buying bonds right now, because once the rates do go up, those bonds are not going to be worth much. So this is, again, very significant as you keep track of the overall negative yielding bond market and how Bitcoin and gold and all other assets that are seen as flight to safety perform as we continue to develop this. All right, guys, that's about it for this episode. Hope you enjoyed. As always, please leave any type of feedback in the comments, any questions, any pairs that you'd like me to take a look at on the next episode. I'll be glad to do that. And also, what are your thoughts about the commitment of traders as being one of the indicators when you pick your positioning for BTC? All right, guys, happy trading.